Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Negro and I'm a partner in the Private Equity and M&A group at Stikeman, Elliott. For today's podcast, I'd like to welcome our special guest, David Ritchie. David is the founder and president of CFO Hive. David, thank you for joining us and welcome.
Appreciate you having me here.
David, we always start our podcast by asking our guests to tell us a little bit about themselves. And for you, obviously a little bit about CFO Hive. So I'd love to start there.
Yeah, great. Thanks, Mario. Starting with CFO Hive, we work with businesses that need CFO or senior finance level expertise, whether it's fractional, full-time, or on a project basis. And we have a network of experienced CFOs that we continuously curate so that we can provide what we call precision expertise. And that's the right industry, the right skills, the right fit, and the availability to meet the challenges and needs of our clients. And so my career dates back, I guess, quite a bit now, but started off at KPMG back in 2002 and I'm a CA. And then, most of the 20-year period from there was in the healthcare space, finance within healthcare, so pharma. And then I moved into health technology, CFO in a venture-backed company. And I'd like to share some of the gaps or opportunities I saw in the market from that time. We had raised a Series A. We were about to list on the venture exchange. And I needed help to get our statements IFRS converted to IFRS, get a prospectus done on top of my day job. So a couple of, I call it temp agencies, had sent folks over, and it was just didn't quite have this specialized skill that we needed. And then I was referred to 3 or 4 fractional CFOs who I'm sure would have been great, but just couldn't deliver on our timeline, which was now. And so, that was one, I guess, learning where there was significant opportunity in the market to help. And then afterwards, I had joined a healthcare company in the executive healthcare space. And when the pandemic came about, I established for them an advisory practice and led this practice, which was effectively a fractional chief medical officer practice, helping companies navigate the pandemic. And so that practice building, coupled with my experience and the gaps and opportunities I saw, really informed how I'm spending my time now with CFO Hive.
David, CFO Hive tends to kind of play this unique role in the marketplace and really kind of adding value by really reinforcing that CFO role in a variety of different circumstances. Like, where do you see you add the most value in the marketplace?
Yeah, that's a great question. I'd say there's 4 kind of broadly speaking scenarios that we tend to be helpful in. The first one is a company is growing and maybe grown beyond their current finance function, tends to be north of 10 million in revenue, depending on the complexity of the business. And they need someone to help them professionalize at a foundational level so that they can continue to grow and scale on top of that foundation. So we get into the people and the finance function, getting that right in the structure, the processes, the controls, systems, reporting. So those foundational capabilities. And then shifting into a forward-looking capability, they tend to not have that, where it needs to be, financial planning and analysis, that FP&A function, budgets, forecasts, really strategic planning. So more of the typical CFO. You can't do that without the foundation. So we tend to see that need in growing companies. The second scenario is more of a stuck or in distress business. And they need something to come in there, help them stabilize, develop a turnaround plan and execute on that turnaround plan. So that's quite common. Then I'd say companies that are transacting. So they could be, and this is really any stage company, early stage to established business, but a capital raise. They could be looking to go public, need help for an IPO, less of those as of late, but we think more will come. And then certainly M&A, which, is where your audience pays attention and spends their time. And that could be, before, during, or after an M&A transaction. The fourth would just be more of, addressing gaps. You've got a vacancy, you need additional resources for a project, and that could be where we're helpful for really any stage from early stage to enterprise. I'd say sweet spot, Mario, would be lower mid-market to mid-market as far as where we see most of the need. And then industry, agnostic, really from construction services to healthcare, financial services, professional services, technology, retail, manufacturing, really the full gamut of industries. By virtue of the network that we work with, the roster of CFOs, they come from a broad range. And then really covering private, public, nonprofits, and certainly across North America, both in terms of where our clients are and our CFOs.
One of the things that's been interesting as I've noticed over the years is the growing role or the additional role that CFOs play in M&A. And even in middle market or lower middle market companies, they've taken on a much more prominent role. And you brought out the fact that in some cases, frankly, they're brought in because a company wants to grow and doesn't have the resources, or frankly, they might not have a current CFO who can do M&A, because not all CFOs are the same. They come with different experiences. And, I wanted to ask you a little bit about the kind of changing role of a CFO in M&A, because clearly they're looked upon as being a kind of key ingredient as you look to kind of do buy and builds or do M&A or ramp up, or as you pointed out, doing equity raises. So tell us a little bit about that and what you're seeing in the marketplace, because it's interesting. It's not a salesperson or an M&A person, or it's really the CFO that's taken on, I notice, more of the burden as a company focuses on doing additional M&A.
Yeah, there's a lot there. I'd say the first thing that comes to mind is, it's not the most well-defined role. Some people tend to confuse, what a CFO is, even CFOs themselves, but there's really not a one size fits all. And a CFO that's really effective in an earlier stage, a startup or a scale up, those are different. So growth stage is very different than a public company CFO. And, you have an M&A scenario that's very unique as well, understanding how to work with private equity. And so I think it's very hard to have a one CFO that can really cover the life cycle of a business that starts up and then grows and then becomes, established company, private or public. So that's one, really hard to get what you need across that life cycle, that evolution. And so understanding the different types of CFOs and different skill sets is really important when you're going out to get the kind of help you need. The other evolution, I would say, is just a broader capability set, the evolving kind of beyond the finance function. And so, the strategy, we all know CFOs play at a strategic level, but really being a partner for the business, I think increasingly you see CFOs beyond the traditional finance function. And so those are some of the broad CFO trends, but then I'd say this move to fractional. Couple things there. Post-pandemic, how people want to work, I think is really influenced mid-career. Certainly those are demographically, like coming up on retirement, are more interested in contract or fractional, and that's significant. Folks that maybe want to golf a couple days a week or winding down after a career Big Four as a partner or, in industry. But then mid-career folks that just want to work differently post-pandemic, I think that's significant. So the pool of talent and folks interested in this kind of work, I think is unprecedented and continuing to grow. Then I think there's this opportunity in the market where value creation for these companies that previously couldn't access that type of expertise in that, let's call it mid-market down, but can certainly benefit. And so there's a lot of education there required. They don't know what they don't know. So we're still scratching the surface. But I think there's a ton of opportunity, especially in an environment with like interest rates are higher. So the focus on profitability and cash flow and operational efficiency. And then as these companies and M&A, the anticipation of a lot of companies changing hands over the coming years, I think you'll increasingly see the need or the opportunity to tap into that talent pool. And what it allows them to do is get what they need when they need it without the full-time burden. And then when they're ready for a full-time CFO, they can. But that's a huge trend that I've seen that I think is really favorable for building and creating value in the market.
One of the places where I see that trend the most is amongst private equity firms. You said it best, like the CFO has become one of the key components of value creation when you consider new portfolios or ambitious kind of strategic planning. It tends to kind of really, the anchor tends to often be the CFO or the kind of CFO set of skills, we'll call it. I'm curious, in your perspective from your practice, are you seeing a lot of kind of mandates that specifically focus on that skill set? Or is it more still the kind of generic, I need a CFO to run a company, as opposed to a CFO to drive M&A, drive growth?
Yeah, it's a great question. I think we see both. A lot of times, so private equity firms will come to us. It could be before or after an acquisition closes. But often there's either, a CFO there, but they're not the right fit, or they don't have a CFO, but they need a certain level of capability. And then there's two scenarios. If they are going to hire a full-time CFO, that could take a lot of time. So a lot of times we'll come in there tomorrow and you'll get them from A to B while they run a search. And I really like the idea of getting someone in there that may convert to, it could be your full-time option and really de-risk the hire. So really an elegant solution in that we're solving an immediate need. It could be systems implementation or just really professionalizing the finance function and some of the strategic. And then when they get their hire, call it in 6 months, they've really accomplished a lot over that period of time, or they have the right person that we've brought them. So that can convert to full time. So really like that. Or that's what I call bridging the gap. Or we're setting the table and it's, you don't need a full-time CFO, but you need someone to come in right now and, fix things and then hand off to either the existing or a different finance function, at a controllership level down, let's call it, whatever's needed on an ongoing basis. And then as far as what we're going in to help with, I'd say it's back to that foundation and then strategic. And you see the same things at a foundational level. Process. They tend to have lots of, let's call it areas of concern. It could be inventory in the balance sheet if something's broken or the cash conversion cycle. The close process tends to need help. They're maybe undergoing the first time audits, tons of workarounds. And certainly, as I mentioned, systems are a big part of that. They're either going to be implemented or have been, and it's not easy. And so I think these PE firms will come to us because they can't afford to get it wrong. And so you'll get someone that's been there, done that, and get them to where they need to go. And then certainly, as you alluded to, the strategic side, helping drive performance comes in. So, if there's a continued M&A strategy, it could be a big part of that. Partnering with the CEO and the management team to execute on their strategy, I think is critical, and really setting that strategy, building accountability throughout the organization. And that comes back to that broader role of the CFO, that they can add a ton of value where they're needed on an ongoing basis from a strategic perspective. Sorry, that's the long-winded response, but hopefully I gave you a flavor.
Obviously people invest a lot in hiring a CFO, and it really is a change agent, or they see it as a key ingredient for success or growth or balancing out a company. But, I've also seen where they sometimes get it wrong. They didn't choose the right CFO for the mandate, and it really can have a detrimental effect. First of all, you lose the time and the opportunity. And when you see the wrong fit, why does that happen? Why do you think it happens? I see that sometimes when people look for a CFO that focuses on M&A or growth, and they can't seem to find the one that they're looking for. What do you think is one of the key factors that lead to that kind of misfit? Company looking for a CFO that didn't find the right one for what they're looking for.
Yeah, hiring is hard. And I think at the CFO level, again, given what I mentioned, which is there's so many different types of CFOs and profiles, it's quite easy to get it wrong. If you focus on near term, hey, we're going, public, or we need to build the foundation here for scale, get this finance function humming so we can continue to grow and everything works like a fine-tuned machine. That CFO is different than the one that's going to help you execute on M&A or expand globally or outsource your manufacturing. There's just such a broad skill set at the broad CFO level that when you make a hire, it's really hard to capture needs for today and tomorrow. So even if you get the right people for your needs today, and even that's not a guarantee, if tomorrow's needs may look different. So really understanding what your needs are over the coming years, I think is important. And then, as you know, sometimes folks can deliver on certain things and certainly can interview well and present themselves well. And then 6 months later, the honeymoon ends when something's not right. And so, I'm a really big fan of the contract. I hate to say try before you buy, but getting to know someone for both sides before a commitment is made. And so it doesn't have to be all fractional. You can have a full-time person under contract and, maybe they're the right person. As I shared earlier, just de-risking the hire. I love it. The best move I actually made in my career, Mario, when I got out of pharma into health tech, it was kind of hard. I was in subsidiary pharma. It was hard to break free of that kind of mold. Recruiters would call me about those types of CFO jobs. And I wanted to move to a more early stage. I mentioned my entrepreneurial desire. And so to move into health tech and making that jump, I joined a company under contract. They didn't know what they didn't know. I didn't know what I didn't know. And, after 3 months, signed on to be their CFO. But I just thought that was really powerful, coming from a place of we both know each other and nobody's going to kind of get surprised when the honeymoon ends.
I always ask our guests, David, tell us a little bit what they see coming in the marketplace, evolution, the future kind of market trend, or I call it the crystal ball question. You look at the kind of evolving role of the CFO, and particularly in M&A, but what do you see where do you see the market going in terms of the role of the CFO or the opportunities. And I agree that fractionals become very, very prominent. That I see it a lot. Other trends you see that are something to keep our eyes open for in terms of the evolution of this key role in the marketplace?
Yeah, I think that the understanding of how a CFO can help for a lot of, let's call it mid-market down businesses, lower mid-market businesses, and the value creation that a CFO could bring those companies. A lot of people think they have a CFO, and we tell them that's really a controller, not a CFO. And just because you call someone a CFO, it doesn't mean they're performing at a CFO level. So a lot of CEOs, business owners, don't really know what a CFO could bring, that having a peer at the table. So I think continued education in the market, the availability of those folks that are interested in contracts that I mentioned earlier has really increased the tailwinds in terms of, let's call it talent pool. It's 10 years ago, I think people looked at contracts and thought that's for people who can't get a job. And that's just very different today. And not just finance, but more broadly. And so I think, marrying those two, the understanding from those businesses of how they can get help and coupled with the availability of experts that can help them is going to really open up a ton of opportunity and value creation. Obviously, there's CFO trends more broadly, the continued expanding of that role. AI, we talk about it all the time, the modernization of the finance function. There's a ton of opportunity there. And certainly, I think a continued labor market that's challenging, hiring being difficult, a tight labor market for CFOs. And CFOs and down in the finance function, it's not easy to get the right people we want on a full-time basis. So I think those are continued challenges that we'll see. But, I really see it as more opportunity to value create and help businesses really step up across the board. And it's not just financial function. It's also operationally, really across the business in a way that's super impactful.
Well, David, I want to thank you for joining us. It's been great to have you tell us a little bit more about, obviously, your work at CFO Hive, but also just the evolving role of the CFO and M&A and some of the issues and opportunities that this role presents. So thank you for joining us.
Oh yeah, my pleasure. Thank you for having me. Thanks for everything you're doing in the ecosystem. You bring a lot of people together and you'll get the word out, which I think is really great. And so really appreciate having me on.